Hey, it's Obi Chukwumah with Space and Equity, where we're all about increasing assets and creating new space. We're here today with the man, the myth, the legend, not the legend at all, but Larry West of Precision
Business
Strategies, providing tax solutions to business owners across the board. Larry, it's great to have you. Excited about what we're going to get into.
Yes, indeed. Appreciate the opportunity.
Awesome, man. I'm selfish, so a lot of this information that you're sharing with the public, I'm going to use for our own operations. But, before we get into the meat of the conversation, I like to do what we call background checks. So we get to know our guests. So we're going to throw some questions at you, get your idea what kind of person you are from those questions. The first is,
Let's do it.
The first car you dreamed about owning. Why, and did you get that car?
I'll start with the back end. Did I get it? No. The first car was a Mercedes-Benz. I don't even know the year, but it was a bubble Mercedes-Benz.
Okay.
And that's because when I was younger and growing up, huge Cash Money fan. So if you watch like Big Timer videos, Lil Wayne videos, it's always a Benz right there. It's always the bubble Benz. I said, I'm going to get one of those.
Cash. So every time people say they Cash Money, I got to think of the era where they were, because I got into Cash Money. I'm about my freshman year, senior year in high school. So I'm a 99 high school grad. Where are you in that space?
Man, 99, I was in 4th grade.
Oh, God. Oh, stop. Oh, so when you were looking at Cash Money, Wayne was not, you looked up to Wayne.
Yeah.
Wayne was my age, a little bit younger.
Oh,
wow,
man.
4th grade.
I had the bandana doing signs that I had no idea what they were.
Oh, you just made me feel
I tell you, the classic album for me, like kind of my transition into just really listening to music, Block is Hot. Right.
Okay.
That's where it started.
Okay. So you like a 1990.
Yeah.
When you came into this world. Oh, I didn't realize we had the 10-year gap. Man, you out here doing it.
I got a couple of grays, man, so I can be older.
Okay. So this is very impressive. I want to know more about, so you're 10 years out. So you're about at there, like the 10-year high school reunion time. Have you done any of the high school reunions?
No, I didn't go because I grew up in Milwaukee and we live here in Dallas now. And so around that time, we just didn't have the time to go back and do the high school reunion. But it was 2018, so it would have been three years ago.
Okay.
Yeah.
And so you told me about the two kiddos. You got a 6-year-old, you got a 4-year-old, boy and girl. Yep. Who's older?
My boy, he's older.
He's older.
Yep.
Okay, so when his little sister came around, what was his reaction to this?
Oh, he wasn't having it.
He wasn't having it?
He wasn't having it. We've got some videos and some pictures where I'm holding Zora, that's my daughter, in this arm, and I'm telling Larry, come over here, and he's standing by his mom. He's like, nope, I'm not doing it.
Yeah.
It probably took him about 3 to 4 months to warm up and get used to her, and now they're inseparable.
Yeah.
I mean, they're almost like twins. Yeah.
Those the interactions is so great. Ours is pretty far apart. Well, I have a 15-year-old and a 9-year-old. So by the time the 9-year-old came around, the 15-year-old was so used to being the only child. So it wasn't, at first it was like, okay, I want to help. And then it was like, this person's taking too much shine. So those dynamics are very interesting.
They are.
So where did you meet your wife, the mommy?
We met in high school.
Okay.
Yeah, we met in high school, Riverside University High School. Yeah, we were.
That was Milwaukee?
That was in Milwaukee. Yeah, we were juniors. We were in a keyboarding class, piano class, and she had transferred to the school, and she was assigned to work with me to get her up to speed.
Okay.
And it's funny, this is also my foray into the entrepreneurial side. I was selling candy at school at this time too, which you wasn't supposed to do.
Yeah.
But anyway, she walked in, she had a bag of Skittles, and I was like, first of all, she's new, and second of all, she ain't buy those Skittles from me.
Yeah.
So that's my gateway, right? That's my end. So that's where we sparked. Yeah, exactly. So where you get those from? So anyway, that was the start of the conversation, and it's been history since.
Awesome.
Yeah.
So you're selling candy. You let her know that you're the plug. What next?
So if you let her tell the story, she didn't like me at all from day one. But I knew that she knew that I knew. No, but we had a good friendship, I think, at that point. I was helping her out, just kind of get caught up on the keyboard and where we were with piano lessons. And so we talked quite often. I mean, really every day that we had the class. And then it came to the point in the semester where it was time to transition and, classes change over, and we swapped numbers. And again, we're still friends at this time, not even thinking about dating. But she didn't call me. And I was like, I gave her my number. She started buying candy from me. Well, why she ain't call?
Yeah.
So anyway, man, I think maybe 2 months or so went by, and then she finally called, and then she called private. She called blocked at that. But that conversation started everything. She was babysitting her nieces and nephews at the time. I think I was with my sister buying my niece a bed, and so from that conversation forward, we just really started hitting it off, and we didn't start dating. So that was junior year. We didn't start dating until our senior year rolled around. And it was more towards the end of the year. So,
Gotcha.
Yeah.
Gotcha. And then so you went right into entrepreneurship. You already were an entrepreneur when you were selling candy throughout high school.
Yeah.
But then was there any thought of corporate, or you're like, no, I know what I need to do, and I'm going to...
Well, I tell you, I started my career not even on the business side.
Okay.
Sorry, I started on the education side. So my undergrad is in bachelor's in English, a master's in education, and I was going to teach. I was going to go on, be a college professor, climb the administrative ladder. That was the game plan for me. And I realized, and I know this is selfish now, but I looked at the plan and said, this does not make enough money fast enough. So if you know anything about education, it's a lockstep. You got to do this to get to that, and the salaries are set.
Yep.
And I said, well, before I even reach six figures, I'm talking about maybe a decade of doing this.
Of going through that process, and like you said, locked. I was a teacher for 2.5 years.
Yeah. So it's check the box, and if you didn't check the box, there's no next step for you until you do. So this was the end of, I had turned in my thesis, everything passed. We were 2 weeks from graduating. I went to my friends who I was in the cohort with, and I said, y'all, I can't do this.
Yeah.
2 weeks before graduation, I went ahead and matriculated and finished, but then I went back and got an MBA in finance and accounting, and that's where I really got into the business side of things. And my goal there, and again, very selfish, I'm going to be a high-profile investment banker. I'm doing M&As.
Yes.
You're right. $250,000 a year. That's where I'm headed.
Yeah.
It's not going to be New York. It might be Chicago, but that's where I was going. We end up in Abilene.
There's no M&A activity in Abilene.
No. So you talk about being humbled, man. I had to, my first job there, I had to take a job with a bank there in the mortgage processing department, literally taking handwritten mortgage applications and data entering it into the computer. And ego was blown. From there to a production job where I worked at a cookie plant. No idea about supply chain. Did that, and then the financial advising job came along where my wife's professor's husband gave me an opportunity and said, hey, come work for the financial planning firm. And from there, everything started to grow. I fell in love with the tax side and started to cut my teeth on tax planning and tax strategy. And of course, being in a financial planning firm, those two things really started to mix. And that's where it really started for me. Yeah.
So by the time you arrive in Dallas, 2014, you are on the financial planning side of things. You start Precision Business Solutions or strategies then?
No, that comes a couple of years. That actually comes in 2020.
Okay.
But so before that, I worked for traditional CPA firms and kind of got locked into doing tax prep and things like that, but still had a love and a passion for strategy. The last firm that I worked for before leaving, that just so happened to be the transition that they were making over to the strategy side. So I really got to grow into that space and help build out their strategy and consulting. And then it came a point of, and again, I'm just going to be very candid with you. This is what I'm getting paid to do this. This is what I know the clients are paying. Why am I not just doing this on my own?
There you go. There you go.
That's
it's that fear that usually stops us from doing it on our own.
Yep.
But absolutely.
Yep.
Absolutely.
So it comes down to taking a chance, right? And recognizing that if I can do this for someone else and I'm really, really good at it, there's no reason I can't do it for myself.
Absolutely. You have gained the intellectual capital necessary to deploy it for yourself, and then people get to buy into you. The customers buy into you anyways, rather than sell that customer relationship to the bank at a discount based on your salary. Take it on yourself. You take on the risk, but you're going to take on the rewards too.
Exactly. And that's worth it.
Yeah, we preach that out here. I'm a W-2 guy. I'm 41 years old. Been a W-2 guy from 23 until 41 until basically a week and a half ago. So practicing what I preach and jumping out.
Love it.
On the other side. Taxes were always different for us. When the wife was in school and I was the only income earner, tax time was I get a check back. And then those W-2s went up.
Yeah.
And the first time we had a tax bill that was greater than $100,000, I just about fell out.
Yeah.
And I was like, what is going on? So tell me about this dilemma these W-2 earners have and how they can mitigate those issues.
Yeah.
W-2 earners.
Well, I always start to say, well, first, we got to recognize it's a good problem to have, right?
Correct.
Because it means you made some money.
Yeah.
But on the other side of that, most people think that when they have a W-2, all of their tax options, all of the doors are closed, and it's not. Is it as expansive as business owners? No, but there are still some small things that they can do. The most obvious are making sure you are maximizing the contributions to retirement accounts, because those things can help lower your taxable income. Make sure you're maximizing access to HSAs if you have access to that. Those are some key things. But then the third focus, which not a lot of people talk about, because everyone's focused on jumping to some type of a side hustle, which has some merit, but it's creating a plan, and it's more of a wealth strategy to transition from the W-2 income to investing in assets that produce money, because that's where you're going to win on the tax side. Every time you go out and you earn $1, there's a tax waiting for you. But when you have an investment, real estate is a great example, obviously, but when you have an investment like real estate, that's a tax efficient dollar that comes back to you.
Correct.
So that for W-2 earners, that's where I try to lead them. It's more of a wealth strategy of, all right, I'm earning good money over here. There are tax implications, but whatever I can save on the tax side, let's start investing in assets and building the chassis over there, because you built the gateway to tax efficient income in retirement and tax free income in retirement.
Yeah.
And that's where folks should be.
Then tell me about that cap on the real estate at $25,000 per household.
Yeah. So when real estate typically kicks off a loss every year, even though it's cash flow positive, because of depreciation and other things, there's usually a loss. So for most folks, if your income is below $150,000 if you're married, below $100,000 if you're single, you can use up to $25,000 of those losses to offset your W-2 or your active income. The moment you go above that, right, $101,000 if you're single, $151,000 if you're married, it's suspended. You can't use those losses at all, and they carry forward into future years.
Okay.
So if for folks who are right on the cusp, right, let's just say you're at $150,000 exactly, that's where you really want to focus on those core things that I talked about: retirement account, HSA, and some additional planning to pull your taxable income down. That way you can qualify and use those up to $25,000 of those losses to offset the income.
Gotcha.
Yeah.
This may sound like boring stuff, but it's critical when it's the money in your pocket, because oftentimes what hits a lot of us, our peers, I imagine we're in the same boat in this sense, is that we're well educated, we go and we get great jobs, and we get excited about that salary, and I spent it here, I spent it here, I spent it here, and then the tax bill comes, and I'm like, oh, what'd I do? So talk about strategizing that personal financial statement, that dollar and where it goes in general. What do you advise your clients to prepare them to not be overwhelmed when that bill comes? Or I've already deployed, I've maximized my HSA, I've maximized my employer match on the 401k, I'm preparing to invest in assets that are going to start generating an income. They go from school, and to that is a huge gulf for most of us, especially in our community. How do you prepare them in that sense?
Starting at the back and working our way to where we are today. The story is basically, where do you want to be at the end? What's the end game, right? And for some folks, they have no idea, but for most, they'll have at least some type of vision of what they're trying to get to. And it's like, great. And that's the other thing, too. There's no judgment for what you want. Some people feel some type of way if their end game is like 7 sports cars or whatever it is, right? That's what you want. That's what you want. And we built the plan to help you basically get there. So if that's where you want to be, how do we start to direct the dollars today so that you can live that type of lifestyle, but we focus on doing it in a tax efficient way. So if you want to, again, buy a Ferrari, right? Is that your goal? If that's your goal, how do we purchase an asset that produces tax efficient income that you can now use to go buy the Ferrari, which essentially comes to you for free. If you think about the circle of money, right, essentially comes to you for free. So it's what's the ultimate end goal, and then how do we build the journey for you to get there?
Gotcha. So that we've spent a lot of time on that W-2 earner, that high W-2 earner. Let's talk about the entrepreneur that just jumped in feet first.
Yeah.
And then they're making $500,000 and don't know where the money's going. They don't have a budget. How do you sit down and unravel that for those type of customers?
The budget is the first place.
Okay.
And I'd say that's usually the hardest thing, because the money, they're spending the money just as fast as they're making it. And sometimes that's reinvestment in the business. Other times that's lifestyle. But what we really try to get at is, let's make sure the dollars are going places that have an ROI. So even on the business perspective, a lot of folks will say, I'm reinvesting. That's great. What are you reinvesting in? Because if you're pouring all your money into marketing dollars, for example, is the marketing dollar actually driving more revenue to the company, or is it a sunk cost? We got to measure that, right? If you're reinvesting it and you're constantly buying equipment, is another example. Does the purchase of that equipment actually generate more business? Because if it doesn't, we got to figure out more strategic places to put the dollar. So we look at the cash flow side of the business and where you're strategically placing money. And then from that part, it's what do you truly need to come home and live off of? Let's talk about getting you to that point and how we're going to creatively get you there. Because some of that, depending on the expense itself, may have business application, and we can actually use that as a part of the business to do it tax efficiently. And other things, we just have to pull money out. So let's figure out where those places are so that we can set you up on the budget to where the business cash flows and it's not crunched, and you are okay at home. And now you can really reinvest and grow the business and also build your own personal wealth.
What does it take to have a good customer in that sense? Because if I got to imagine they come to you and they don't have a budget and you're just unraveling it to get them where they need to be. What have you found have been the most successful ways to get them on a path that makes the most sense and drive?
That end in mind, right? When you can put in front of them, this is what you told me the goal is, and this is how we're going to get there. And it's really a matter of, it's almost accountability too. It's really a matter of buy in and let's do it, or don't and continue on with the path that you're on. And they just kind of make that choice at that point. And sometimes we have to be the bad guy. But when they look back months down the line, we've improved cash flow. Years down the line, they're tax efficient. And so it's almost like children, right? When you tell them to do something, they don't understand from a parent's perspective that this is in their best interest.
Yeah.
It's almost the same way with business owners and the business being their baby in a sense. But this is what's going to get you to what you said you wanted to get to. So you either do it or you don't. Yeah. And we know what happens when you don't.
Absolutely. So as a former commercial banker, my clients, the relationship with my clients was vital that I understand how their CPA was providing strategy, who their CPA was, what type of financials and what level of financials they were maintaining.
Yeah.
And then ultimately, were they providing in their returns enough cash flow to support the transaction they're trying to engage with me? And sometimes there was a conflict between this tax strategy to save versus I need to deploy debt to make money.
Yeah.
Tell me about that interaction, and also what's the main difference from your perspective between a tax strategist and a traditional CPA?
Yeah. Good question. The whole piece on the debt focus, right? Some people, and again, this is just their personal philosophy, how they grew up and what they think, they just don't like debt, right? Even folks who have debt on their balance sheet right now is, I want to throw as much cash as possible to pay it all down. And it's like, hold on, pause it for a little bit.
Yeah.
Debt could actually be good. There's a reason we call it leverage. It has to be used correctly. So as we're looking at it, we're evaluating, okay, this is the debt that you're going to take out, right? This is the loan to go acquire whatever you're going to acquire. One, do we have the cash flow to support debt service? If we do, that's great. Two, this acquisition, whatever it is, machinery, equipment, a building, how is that going to generate more income for you down the line? Yeah. Because again, if it's something that's just going to be a sunk cost, we don't want that. But if it's going to generate $1 to make the business more efficient, or a tax efficient dollar, which is even better, then let's go after it. Let's do it. Debt and leverage could actually be the gateway to more wealth. Because while people say cash is king, it only gets you so far. At some point, you run out of cash, and you're going to need to leverage something else. So,
absolutely.
Yeah.
Perfect example. We're starting Scooter's Coffee. My partner and I, our manager is already in place. One manager is already in place. The second manager is coming in place, but we probably won't be live until May. We could take the salary that we need to pay these guys while they're still working and doing activity for the business, but we're not generating revenue. We can just pull from our cash, or we can get a business line of credit to utilize. And then there's a tax benefit on that line of credit. I can go to you and say, here's all my expenses associated with starting the business, including this line of credit, versus deploying that cash and that cash just being gone.
Yep. Because that's at the point when the cash is gone, then you go look for leverage, and the bank is going to say, "No, you ain't got nothing to pay us back with."
Exactly. So then to piggyback, traditional CPA, tax strategist, what's the differences?
Yeah, I think it really comes down to reactive and proactive.
Okay.
Traditionally, folks in our field are guilty of being reactive, right? And that is, bring me your stuff, let me put it in the system, I'm going to tell you what you owe. And that's when you look at them and you say, well, why didn't I know this months ago, right? Why are you telling me this 2 weeks before the deadline? And that's just how our industry is operated, which is bass-ackwards to me. The strategist perspective is more proactive. It's, all right, it's the top of the year. Let's sit down and look at what we project this year to look like. All right, this is what we think it's going to be. Let's put these things in place to be more efficient from a tax perspective, but also these things so that we're prepared for future years, because we're also accumulating wealth. How do we transition that in a tax efficient way? So we're doing all this planning right now so that when the events do happen, we already know what the outcome is going to be. And that's folks in our field are transitioning towards that, not fast enough, but that's the main difference. And that's 1A. I'd say 1B is the keen focus on the strategy side. More folks on the traditional side are black and white. It's either a yes or a no. On the strategist side, it's well, how can we actually make that work, right? Cars are a perfect example. Some folks are, yes, you could put the car in a business. No, you can't. We're more or less looking at, well, how can we actually make this work in an efficient way? Can we, like I described before, can we buy an asset that produces income where we can purchase the car? Or can we use the car in the business, get the business deduction, and make sure we check all the boxes so that we get the full write-off and we parse things appropriately? So it's more of how we do it as opposed to whether it's a straight yes or no.
So at PB Strategies, do you guys take on the comprehensive look for your clients, or do you have some clients that come to you, they have a CPA that they're working with, but they come to you for the tax strategy? How does it work?
We'll do both,
Okay.
which is always an interesting conversation
Like,
because
why do you even need them?
what usually happens, and I was talking to a client about this the other day because this is their setup exactly. Their CPA initially, when we had conversations, didn't want to say anything to me, didn't want to share any data because they felt threatened that we were going to take the work. And our perspective is, you can have the tax prep work, you can even have the bookkeeping and accounting work if that's what you really want. But we're going to make sure we get the strategy in here so that the client actually saves some money. And when they realize that difference, it's like, okay, perfect. We can work together. So we'll have clients that are on both sides. They have a great relationship with their CPA tax preparer. They do a phenomenal job preparing those returns. We don't disrupt that process, but we're going to make sure that you don't have any surprises at the end of the year.
Gotcha.
Yeah.
What's your ideal client like from an income level, from a business vertical standpoint? What do you like to work on?
Yeah, Jeff Bezos, Warren Buffett, Jay-Z. No.
Okay, gotcha.
No, so ideal for us are clients that have fairly mature businesses that are generating $1 to $5 million in revenue, maybe even 5 to 10.
Okay.
But in that space, I think we can do some really phenomenal tax planning for them. And also, as they're generating wealth, we can do some really great estate planning as well. And in terms of verticals, we do a lot in the real estate space. I really enjoy working with real estate folks because they get return on investment. Everything they do is what's the ROI on that, which is the space we play in from a tax strategy perspective. But we'll work with folks across multiple industries. We want to make sure it's a good fit. So our onboarding process is, we got all these documents for requests. We kind of walk through these things and we clearly lay out, this is what we're responsible for. This is what you're responsible for. This is what we think the end goal is going to be. It's game time. Are you ready or not?
Okay.
Yeah.
Estate planning, I'm glad you brought that up. I imagine that's an active process. So we, wife and I, we did an estate 2017. But there's a lot of things changing. How often should somebody revisit their estate planning?
Yeah, every single time you have a life-changing event, married, divorced, new kiddo in the picture, family member you're responsible for, anything that's a very huge, dynamic, life-changing event, you got to go back and update the estate plan to make sure your documents cover whatever your wishes are. And then I'd say if you don't have life-changing events, every 5 years or so, you want to look back to make sure, because your wealth has probably grown in that amount of time. Things need to be in the trust or out of the trust, transition over and moved to certain places or not. So at least every 5 years or every life-changing event, I think is a good time frame.
What's your take on, oftentimes when somebody puts together a trust, it was via their wealth advisor tied to a bank, then the bank puts themselves as a trustee to help manage that money. Tell me about that process and what's the best thing to protect yourself in that scenario?
Yeah, so and you'll see this with fairly well-off clients and wealthier clients because banks have incentives, right, that they want to play that role. I usually have no qualms with the bank being the trustee. However, the things you have to be aware of as the grantor, as the person that's creating the trust is you established a relationship with a particular set of individuals at the bank. This trust is going to outlive you, right? That's the point of creating it. At that point, there may be different people at that institution that may not align with some of the things that you've put in place. Now, they're supposed to operate in the best interest of the trust itself. But again, it's a difference of philosophies, difference of perspectives. And so for most folks, you may not want the institution to be that trustee. You may have 1, 2, 3, or 4 people in mind that you trust. Kind of weird to use trusted trustee, that you trust to serve as your trustee, that you know aren't going to bend and give your beneficiaries everything they want just because they want it. So the bank being the trustee is a good medium for that. But some folks, I think, prefer having folks that they've got relationships with to serve in that capacity.
Gotcha. Make a quick shift here to the bookkeeping side. When your clients come to you and they're operators of the business, they're not sophisticated in bookkeeping, how do you help them through the process with QuickBooks and getting you the data you need properly?
Yep. For most of our clients, it's non-negotiable unless they're individuals and they don't have a huge business. But for any of our business clients, it's non-negotiable. It doesn't have to be QuickBooks. It could be Xero, but you got to have an accounting software and accounting process. Because if we don't get good data, we can't give you good strategy. And when the strategy falls apart and we go back and point to the bad data, the client's going to say, well, why didn't you tell me that from the beginning? So we make it non-negotiable. You got to have really accurate records because it's kind of trash going in, trash going out. And if it's good stuff coming in, good stuff will come out on the other side.
Excellent. Larry, man, that's been a lot of good data for the folks. What size of business? I know you talked about working with businesses in that 1 to 5, perhaps up to $10 million range. But as a business owner, even as a startup, when do I engage the CPA, the tax strategist?
Yeah, at the very beginning, at the moment you start to think that you're going to start a business, I think it's worth having a conversation with your CPA tax strategist and start to interview folks to see who will be a good fit. And the reason is you want us to be in on the structure side from the very beginning. Most folks by default will just go form an LLC because that's what they heard. There may be different ways depending on your industry, what you're engaging in to structure that more tax efficient. So when you say I'm going to start a business, go engage your CPA tax preparer, your tax professional to get started, and then recognize when that relationship becomes stale. Right, even for our clients at some point, and we hope they do outgrow us. Right, if they start to reach a 15, 20, $30 million kind of a threshold, that may be beyond our scope, right? And so you got to recognize when that relationship is no longer beneficial and you have to upgrade to the next stage. So when you're 0 to $250,000 in revenue, you can probably have just about any CPA out there. As you go from $250,000 to $500,000, that's when that tax bill starts to go from $40,000 up to $100,000, and you got to have strategy. $500,000 to $1 million, different things start to happen. So just recognize and be okay moving beyond that particular individual at that time.
Excellent. So my next step for you is, where do we go see, actually I want to touch on charitable. I've looked this up on your IG page, and you talked about a charitable reminder trust.
Yeah.
Okay.
So the CRT, or charitable remainder trust, comes in all kinds of flavors. But what it essentially boils down to is a advanced tax planning strategy for those who are charitably minded but also need and want tax deductions.
Okay.
I'm going to just kind of give the 50,000-foot overview. Basically, you have a bunch of cash, or you have a asset that you need to sell, maybe some appreciated real estate or something like that. Essentially, you take that stuff and you contribute it to this charitable trust. That contribution is a charitable contribution. So just like you give $50 to Red Cross, you now have this huge deduction that you just gave to a charity that you can claim on your tax return.
Okay.
Inside of the charitable trust, though, a couple of things happen. All of the money may not be communicated to the charity or transitioned to the charity right away. They will get it eventually, but it may not all go to them right away. You could actually designate what's called an income beneficiary, and there's an annuitized payment that drips back to either you or whoever you assign to be that income beneficiary. So 100,000 goes in, you get a tax deduction for whatever that number is, and then you get a 6% pay. I'm just using that as an example. You get a 6% payment, $6,000 a year, that comes back to you or your beneficiary. So you've kind of got a win right there, tax deduction plus income for life. What most people will do is they'll take a portion of that money that comes back to them, and they'll take out a life insurance policy.
Okay.
Because what happens is your beneficiaries are looking at you like, oh, but you just gave away $100,000 of money that I could have inherited.
Yeah.
And so you have this life insurance policy that essentially replaces that $100,000.
Gotcha.
So for you, you got the tax deduction. Your beneficiaries never really lost access to that money, and you could do all kind of other things. And then at the point that you pass away, or 20 years, whichever happens sooner, the charity will ultimately get the money that remains inside of that trust. The whole time it's in the trust, though, it's invested, it's earning interest, which is how it's able to pay out that dividend.
Okay.
And so that's just one example of some charitable planning. There are other far more robust charitable strategies that folks can do, but that's one of the more common ones. And it's actually for people that are engaged in crypto. It may be a good way for them to offset gains from crypto using a CRT or a charitable LLC or something of the like.
Awesome. What are you seeing trending in the community, specifically in the Black business owner community, as it pertains to utilizing tools and resources like yourself? What's the demographics of your clients right now?
If I had to just take a stab at the dark, 98% of my clients are women. 98% of them are Black women.
Wow.
And all entrepreneurs doing some amazing stuff. I mean, we've got everything from executive coaches that are high six figures. We've got women that are in the development and real estate space. But a huge, we talk about trends. Women in the entrepreneurial space are taking off, and they are crushing it, right? By no stretch of the imagination, they're doing phenomenal. But what I will say, though, overall, and this isn't specific to women, but this is just specific to the Black community in general, as we get into the wealth and the tax planning side, there's there's too much of a skepticism of that's too good to be true, it must be a scam. So I've got a client that I met via Clubhouse, via the app. We're doing some amazing stuff. To say that we're probably going to save this person $1.5 to $2 million
Wow.
in taxes in 2021 alone is not an understatement at all. But the strategies that we rolled out for him, I presented those same strategies to one of my wealthier Black clients, Black guy, and he looked at it and said, nope, not doing it. And I'm like, do you really? Because to save $2 million in taxes today, that's a number. But what is that $2 million worth down the line, right? Like, how can you reinvest that $2 million, and what does that turn into? And so I'm trying to explain what that is, and it just sounds too scammy, right? And I'm like, you are blowing a massive opportunity here. But I see it too common that they look at those opportunities. That's too good to be true. That's for white folks, or nah, I don't want to get caught up in it. When it's like, hey, these are legitimate things you got to take advantage of.
Absolutely. You know better, you do better.
Yeah.
Absolutely. Tell me, what do we need to promote for Larry West? What do you want to share with the group? Where do they need to check you out?
Yeah, absolutely. So If you like, no, I'm just joking. So a couple of things. If you want to check us out, our website, www.pb-strategies.com, you'll see a list of all of our services and how we work. But more importantly, I think from a knowledge standpoint and a media standpoint, follow us on Instagram and on YouTube, because that's where you see a lot of the content. A lot of the strategies we talked about today, you'll see lessons where I break these things down in more detail so that you, even if you don't engage us, these are healthy conversations to take back to your person, your CPA, to say, hey, how do we make this happen for me, or does this actually fit me? So YouTube and Instagram, you'll see tons of our content, Precision Business Strategies.
Larry, I appreciate you. Dropped a ton of gems.
And
Thank you for your time. Look forward to having you at other events. We have the Field of the Boardroom.
Yeah.
February 18th, 19th, and 20th. You're going to be there as a speaker on that Saturday. Excited to have you. Hopefully we'll have you at the basketball game as well.
Yep, I'll be there. Yep.
So with that Mavs suite, we've got a little bit of a nucleus being created in a networking group, and just like we've done, is those of us with a sports background or a music background, and you did those things in teams. You do business in teams.
Absolutely.
So thank you for your time. So it's Obi Chukwumah. You can find us on IG at Obi_empowers. YouTube, Come Correct podcast, put together by the great Firebrand Media team. That excellent work. We look like we're real professionals on there. If you like us, give us a thumbs up. If you don't like us, don't give us the thumbs down. I don't like it. You can email me at obi@Space Equity Corp. And if you make sense, I'll respond. You can also find us on our website at spaceequitycorp.com. We've got paraphernalia on there to share with you. We've got information, the Come Correct Consulting, Come Correct, and they can't stop you.